So it's time for our presentation, and so Emma Hines is here with me. Emma is the health policy analyst from the Wisconsin Council on Children and Families. She provides technical assistance and works collaboratively with advocates, government partners, hospitals, providers, and others to ensure that Wisconsin children and families are getting the best possible support, guidance, and coverage available to them. Emma has a Master of Public Health and a Master of Public Affairs from the UW-Madison School of Medicine and Public Health, among other things. In addition to her work at WCCF, she serves as the program manager for a teen educator program at the Wisconsin Alliance for Women's Health and as an adult and children's yoga teacher in Madison. So Emma's been presenting on tonight's topic throughout Wisconsin, and we're honored to have her here with us tonight. Emma?
Wonderful. Thank you so much. Thank you to all of you. There's a lot of active participation tonight and a lot of you that are on the line. I want to reiterate, for those of you who have just recently joined, and just to emphasize this point, please, please, please be bold about asking questions. If it's occurred to you as a question and you don't know the answer, I guarantee that somebody else also doesn't understand or is wondering the same thing. So I really want to make sure that we get your questions answered and that you're all following along with me, because we will get into some kind of interesting but dense topics, and I'm happy to slow down or speed up as needed, so feel free to let me know that as well. So in addition to a big thank you to all of you, I certainly owe an incredible thank you to WICA. The work that they do, the staff that they have here have been so passionate and so excited to get this information to you all, and I've been working with them extensively to help make sure that you guys are hearing what you need to hear, you're getting the training that you need to capitalize on all the new and expanding opportunities related to health in Wisconsin. So a big thank you to them. It's a wonderful association. I'm glad to be working with them. And as Andrea said, my name's Emma, and I work at the Wisconsin Council on Children and Families, and somebody asked the question earlier whether this webinar would sign them up for the Affordable Care Act or Obamacare, and I just want to reiterate that absolutely not. I work for a nonprofit, and so we don't get any money to sign people up for care. We don't get any money to sell you one version of reality or another. I'm here to purely give you information and to answer your questions. That said, I am very, very committed to the idea of expanding coverage to more people, because I really think that healthcare is something that we all need, and something that can really help us, help our economy and help us all be the healthiest we can be. So on that note, I will get started and we will dig right in. Please let me know once again if you have questions. Is it going to let me advance? There we go. Okay. So we will start out with just quickly going over what is the Affordable Care Act. People throw that term around a lot. What is it? We'll also talk about what child care providers should know or why they should care. We'll talk about who else other than child care providers might be interested in this information so that you can know that when you're talking to your coworkers or your friends and family. We'll go through what I will often call it the ACA, the Affordable Care Act, the ACA, and we'll go through stage one, so what's already happened in the last several years and what's already taken place in the ACA. But we'll try to spend most of our time talking about stage two, which is both the changes happening at the federal level and the changes happening at the state level. So there are two different things happening simultaneously in an effort to expand coverage. So we'll dig into that stuff, and then at the end we'll try to pull it all together and we'll see how we do. So first of all, as I said, the Affordable Care Act, it stands for, the ACA stands for Affordable Care Act. There's a lot of people who call it Obamacare. You might hear me call it Obamacare. Sometimes that term is used pejoratively or negatively. Often it's just used as a shorthand, so I'm not using it as a pejorative. If you hear me say it, it's just become colloquial. So I don't care what you call it. Feel free to call it what you'd like. I'll probably call it the ACA most often. Also, you should know that it's health insurance reform. So often people call it health reform. And I think there's an important distinction there between health reform and health insurance reform. You will notice by the end of this webinar that most of what we're talking about today is related directly to insurance. So we're not reforming the way that your care is delivered to you. We're not, this law is not designed to interact the doctor-patient relationship. It's not designed to alter how hospitals function or anything like that. It's not designed to change how doctors are trained. So it's not about health. It's about health insurance. Also, it became law in March of 2010. So this is kind of a little known fact, but it's been law for 3 years. You might not think that, given that the government recently shut down because of it, but it has in fact been law for quite a while, and all signs point to it continuing to be a law for the foreseeable future. So here we are, and kind of wherever you stand on the law, and maybe your opinions will alter through the course of this webinar, but wherever you stand, it's just the law of the land right now. So we're here to try to learn about it and see where we fit in. And we'll try to break it down, as I said, into kind of those two different parts. So stage one that's already happened was primarily focused on patient protections. So how can the government protect you, the patient, from insurance providers who are obviously very money oriented? So we'll talk through some of those protections that you now have. And then we'll focus on stage two, which is this effort to expand coverage, both private and governmental coverage. That's just happening now, and that's why there's a lot of news coverage, particularly around healthcare.gov. So we'll certainly talk more about that. All right, so this is just quickly for you all, kind of why should you care? And I have about 10,000 answers to that, but I tried to limit it to 4. And the first one is just, I think you all play a really, really important role as informers and mobilizers for children and families that you work with. I think that you know that health insurance is critical for particularly birth to age 2, prenatal care, infant care, well child visits. I know as child care providers, you probably don't want sick kids coming into your clinic or your care center. So I think that we know inherently that healthcare is important and having health is important, but there's a valuable role for you as child care providers to try to inform families and communities about how to keep children healthy and how to help make sure that they get insurance and stay insured. So secondly, it's important to maintain health in order to care for children. So this is about you. So just in the same way that you wouldn't want children coming to your care center ill, you also wouldn't want to go there ill and infect other kids or your fellow coworkers. I think it's an opportunity ripe for illness, and so it's especially important for child care providers, I think, to maintain their own health, stability, and to be seeing a doctor as regularly as possible, and certainly insurance can help with that. And similarly, kind of role modeling for children and families. I think there's some value to demonstrating the importance of having an insurance whenever affordable and whenever possible, and demonstrating that you value your health and your well-being and that they also should. And lastly, there's some role certainly in risk reduction, both health risk reduction and financial risk reduction. At least half of all bankruptcies are due to medical bills. And so purely from a financial perspective, health insurance is truly critical. It's basically guaranteed that at some point in your life you are going to come into a situation either through injury or illness or old age that will require medical care. And so it's that we're protecting against, and it certainly can make your financial future much more risk-free. And this is maybe some of you know Oma Vic. This is a quote, and I'll read kind of portions of it, but you all can read it. she was so excited about her experience going on to healthcare.gov that she just reached out and asked if she could be helpful for our webinar and anything else that we're doing. She wanted to share her experience. And of course, her experience is her experience, and you know, the insurance that you get on healthcare.gov will not look exactly like hers. Your experience with the website might not be exactly like hers. Your previous experience with insurance might not be exactly like hers. But I think it's a good example of what's possible and why this is as important as it is for healthcare providers and for others. So you'll see on here that she describes a health insurance plan that she had previously that was essentially what we call catastrophic coverage. And we'll talk more about catastrophic coverage, but essentially it means that she would have had to pay a huge deductible in order to see any return on her investment. Now, because she went through healthcare.gov and was able to access a different form of insurance, she pays less than she did previously, she gets more robust benefits, and they meet the needs in her life. So she's very excited about that, and I hope for those of you who are needing insurance, you have a similarly positive experience. All right, so this is a little bit about who the uninsured population in Wisconsin is. And probably many of you could tell me more about this than I can tell you, but I just wanted to show you some statistics, some graphs that show you who we're talking about so that you know as you move through your life what populations might benefit from this information. So first things first here is I want you to look at this chart and see if you can find yourself. So the way you do that is on the left-hand side, you'll see group size, which basically means family size. So if you're a single person, then you would go to family size of 1. You know, if you have, depending on your family size, if you're married with 2 kids, then you'd be a family size of 4, or group size of 4. And then based on your total household income, so if you have a partner, just mentally add your income together if you're able to do that, and consider where you fall in this line, and maybe just write that down. Write down, you know, if you're making $30,000 a year, you might write down that you fall between 100% and 138% FPL, which stands for Federal Poverty Level. As I move through this presentation, I'm going to say the words FPL a lot. Please feel free to continue asking me that question, but take a moment now and find yourself and maybe think about your family members and your clients and who else might fall into this chart here. All right, we're going to move on, but I can come back here at any time. All right, so just to start out, I think people often don't realize this, but there are almost 400,000 uninsured non-elderly adults, so people not eligible for Medicare, which starts at 64, in Wisconsin, 400,000. So that's the population of Madison. So that's quite a few people, actually. And so about a third of those are under 100% of the federal poverty level. We'll talk more about this, but if you're under 100% of the federal poverty level, that will make you eligible for BadgerCare. I promise we're going to talk more about that, and you'll be able to learn all about that. And then about 70%, 266,000 of that 400,000 fall between 100 and 400% of the federal poverty level. And that means that those people are going to be eligible for subsidized coverage in the marketplace, and we will talk all about that. Okay? So we've got battling mice here. Okay, and this is, I want you to learn 2 things from this chart. One, that there are 500,000 Wisconsinites that are uninsured, as we talked about. If you add in the elderly, there's 500,000. And then for the important thing about this slide that I want you to note, and the 25% of you that are unemployed or that are uninsured currently will know this, but 62% of the people who are uninsured in Wisconsin are working. So we have a lot of working adults in Wisconsin who are uninsured, which to me is a real travesty, and I think it's something that we can do a lot about, and I think that the Affordable Care Act will help us in that vein. So we have a question here. The question is, why is the 300% federal poverty level, why does this not want me to go back? This is probably just a typo. 300%. Why is 300% FPL less than 250 for a family of 5? Because I made a typo. So the question here is, why is 82,000 for a family of 5 for 300 less than 250? And Tiffany, that's because they should be reversed. Or actually, no, I think that's probably the 89,000 should be like 79 or 69,000. But I will get you, I can send to Andrea here, I can send the FPL levels, or you can just Google them. They're available all over the web, and so you can look that up as well. I apologize for that. We have another question. Is the federal poverty level a yearly income or a monthly income? Great question. Thank you for asking that. That's a yearly income. So when I send Andrea the federal poverty levels, it is also possible to break this down on a monthly basis and on an hourly, a weekly and an hourly basis. So we can get you that information as well if it's easier for you to tell your income that way. But when you're looking at this blue chart, it's for yearly income. And we have a question, what is the difference between uninsured and underinsured? And that difference is essentially, for our purposes today, you don't necessarily need to know the difference, but uninsured is what we're talking about, and that essentially means people who have no current insurance. They have no insurance provider, so when they go to a doctor or a clinic, they're paying the entire cost of their care out of pocket. When somebody is underinsured, often it means that they have catastrophic coverage only, or that they have only preventative care or some sort of kind of subpar insurance. And then we're getting questions about whether or not the federal poverty levels here that you're seeing are gross income or after taxes. So look at this as gross income. Okay, we're going to move on here. Keep asking questions. I like it. So the second thing I want to tell you here is that there's 55,000 uninsured kids. That is 55,000 kids who deserve insurance and don't have it, in my mind. That number is horrifying to me, and I think for all of you who work with kids and clearly love kids, it's important to me that the kids in particular get access to insurance, and I think that we can play a huge role in that. That line right underneath there is that there are 3,400 kids who are currently above the BadgerCare limit, which is 300% FPL. We're going to talk more about this. And they're being moved off of BadgerCare. So that's 3,400 more kids who are going to be losing their current insurance. And that's a state decision. We'll talk about that. And we talked about that. So this slide, what I want you to get out of this purely is that being uninsured is not a urban problem solely. In fact, it is largely a rural problem. There are certainly, in Milwaukee, there's a major population of those who are uninsured, but it's outstate Wisconsin that is particularly vulnerable for not having insurance. Okay, so who else might be interested here? So the first one is, there are many people, like Oma Vick, for instance. You saw that quote from her just a minute ago. She's kind of one of the people who would be looking for better or more affordable insurance. So for the 74% of you that are on the webinar today and are currently insured, there is absolutely no harm in going on and seeing what's available to you. You might fall into this category. Secondly, there are about 25,000 people who will be losing their coverage, or who will be losing their coverage as of March 31st, and they're in the state's high-risk plan, which we call HRSP. And so those are people that are often very, very ill. To get coverage through the state high-risk plan, you need to be denied coverage 6 times by insurers because you are too high risk. So these are very, very, very sick people who are now being moved off of HRSP and will be asked to go on into the marketplace. So they're also going to be seeking coverage in the exchange. Another group that's going to be seeking coverage in the exchange is the roughly 77,000 parents and about 5,000 childless adults that fall between 100 and 200% of the federal poverty level, because we will talk, again, we'll talk about this when we get to BadgerCare, but that group is being moved off.
There's a couple there.
So we have a question here. So somebody asked, I thought the law stated that every child has to be insured. So the law does not state that. I mean, it does and it doesn't. On the one hand, the law says that we want you to cover most children, basically up to 300% of the federal poverty level, so low-income children. We want you to cover them through Medicaid if they can't get insurance through an employer, through their parent's employer. For everybody else, so for all the other kids that are above 300% of the federal poverty level, the law does require them to get insurance or face a penalty, or rather their parents will face a penalty for not having them insured, but they could choose to pay that penalty rather than have insurance. So in a way, the law does encourage all children to have insurance, either through a Medicaid or through the private market or their parent's employer, but they could just pay the penalty for not having it. Erin, we will get to that question about why people are being moved off of BadgerCare, I promise. And we will move on. All right, so we're going to just go through a little bit of insurance lingo for those of you who know this well. Please bear with us and maybe you'll learn something. I have colleagues who have worked in health insurance for years and still have trouble with these terms. So hold on just a second. Okay. Okay, so the first term here is your premium. So the amount of money you pay each month to your insurance company. So this is what most people think of when they think of the cost of insurance, is this monthly amount that you pay into your insurance company so that they give you coverage. Okay, so when you go on to healthcare.gov or when you're looking at health insurance rates, this is mostly what you're going to be looking at, is this premium amount that you're expected to pay every month. The second thing that you will want to look at is the deductible, the amount of money that you have to pay for your expenses every year before your insurance company is going to pay anything. Okay, so for instance, state employees generally have if you're a single person as a state employee, you generally have a $500 deductible, and your insurance company won't pay anything until you hit that $500 deductible, except for copays. So generally, if you're going to a doctor, you have to pay a copay, what's called a copay. So it generally ranges from $10 to $80. It depends on your plan. It can certainly differ for in-network and out-of-network, but it's a flat dollar amount. So it's not a percentage, it's nothing like that. So every time you go to the doctor, you're going to be expected to pay $30, for instance. And that does not usually count toward your deductible, but sometimes it depends. Okay, we'll go through an example of this. I know the terms can be complicated. Premium is the monthly amount. Deductible is the much larger number that you have to meet before they start paying. Copay is the flat dollar amount that you have to pay when you go see the doctor. And then coinsurance is the percentage one. So the coinsurance is a type of cost sharing that determines how much your insurance company is going to pay and how much you're going to pay after you meet your deductible. So for example, an 80-20 structure means that after you meet your deductible, let's say your deductible is $500, the insurance company pays 80% of all costs after that amount, and you pay 20% of those costs. So most plans have all of these things. So you'll want to look at your premium, your deductible, your copay, and your coinsurance. And what's really lovely, one of my favorite pieces about the ACA is that the law includes some regulations about how insurers have to present information. So it used to be the case that you would get your insurance policy and you would not be able to understand it. It was basically written in Russian and legalese. It's now it's a tested, user-friendly, understandable, we hope, version of your insurance. So I hope that as you go through healthcare.gov, you're going to start to understand some of these terms. We just have two more here. Cost sharing is just the accumulation of all the things that you and your provider have to pay together. So that co-insurance, which is the percentage one, like we use the 80-20 example, a co-payment, your flat rate, or your flat fee for seeing the doctor, and your deductible. Those are all types of cost sharing. The reason we have a term for what all of those things are together is because there are limits on your total cost sharing. And lastly is out-of-pocket costs. So again, deductible, co-insurance, co-payment, those are primarily your out-of-pocket costs. Okay, feel free to ask questions about those, but we're going to move on. We're going to use those terms throughout here, but please feel free to ask. All right, so just one quick example. So let's say you have a health insurance policy that has a $50 copay, a $500 deductible, and 80% coinsurance. So if you have an outpatient surgery that costs $5,000, let's hope you don't, but if you did, and you had this insurance and you'd been paying your monthly premium every month, you would, when you have this surgery, you would pay a $50 copay because you went in to see the doctor. You would have to pay your entire $500 deductible because your insurance company doesn't pay anything before that. And then after that deductible amount, you would still pay $890 in coinsurance because that's what 20% of the remaining $4,550. So I know that sounds complicated, but hopefully you can start breaking some of that down a little bit. All right, so ACA Stage 1. So what already happened? So already in effect, this is one of my favorite ones. The ACA outlawed insurance denials for pre-existing conditions for kids. So this happened right away. So right away when the law was passed, the law said no more can insurance companies say, deny a child health insurance because they have a pre-existing condition. So now kids with asthma, kids with HIV that they got from their parents, kids with Down syndrome, whatever it might be, those kids can no longer be denied insurance, which was a common practice. So that's been in effect for years now, and that's helped many, many, many kids. In Wisconsin alone, there are almost 310,000 kids with pre-existing conditions. That's a lot of kids who now have the guarantee of insurance. Also, this is a very celebrated piece of the law, and maybe you have benefited from this or you know people that have benefited from this, but young adults can now stay on their parents' policies until they're 26 years old. So that's a big one. Also, the Affordable Care Act eliminated lifetime limits. So this is a really exciting thing, and it might seem like something that's kind of out of reach or something that might never have impacted you. But amazingly, and maybe those of you who, since you guys work with kids, you might know this, but there are many babies who in the first 10 days of life, because they were born premature and they had to spend a lot of time in the NICU, which can cost $150,000 a day, they can meet their lifetime insurance limit in the first 10 days of life. So that is no longer possible. So that's a really, really exciting change in how the insurance market works. And we have a question here that somebody asked, can young adults stay on private insurance policies and BadgerCare until they're 26? So no, they can. So if as a young adult your parent has insurance either privately or through their employer, your child can stay on until they're 26 whether or not you claim them as a dependent. If children on BadgerCare, unless you're a foster child, if you're a foster child on BadgerCare, you're eligible until age 26. If you're not a foster child, you're only eligible to your 18th birthday. Good question. Thank you. So similarly, the ACA has phased out annual limits on policies. And this is another big one. Insurance companies can no longer drop you from coverage if you were to get sick and if you made an honest mistake on your application. So this might sound very strange, but this was a very, very common practice that insurance companies did all the time. If somebody were to, let's say you were diagnosed with some form of cancer, God forbid, but it wasn't uncommon for an insurance company to look through your application, and if anywhere on there you accidentally wrote the wrong birthday or forgot to mention that you have asthma or whatever it was, they could legally drop you from insurance and not cover you when you needed coverage the most. That is no longer legal. So that's very, very exciting. All right, a couple more of these. Moving forward, in the last year this took effect, insurance companies have to spend 80% of your premiums on actual medical care. So again, it used to be the case that insurance companies could spend as much as they wanted on profits for stakeholders or shareholders or overhead costs, administration, etc. It's now the case that they have to spend 80% of the money that you give them on health insurance costs. But it's not a one-to-one ratio, so it's not the money that you give them you get directly back. It's across the population. So of all the money that they get on a plan, they have to spend at least 80% of that money back on users' health expenses. If they do not do that, everybody on the plan gets a rebate. So this went into effect last year, and many people all over the country got rebate checks from their insurance. Also, moving forward, any increase in any rate increase, so any premium increase of 10% or more in one year is going to be subject to review by our Office of the Commissioner of Insurance in Wisconsin. It used to be the case that insurance companies could just kind of decide willy-nilly that they wanted to increase the premium for your plan by 15% or 20% or 30%, and suddenly you'd be paying a lot more for what you were getting. Now they have to justify that rate and demonstrate that it's needed based on their clients' costs. And also small businesses are getting tax credits to help them subsidize coverage for their employees, because the intention here is not to take over the entire market with individuals buying private care and individuals on government options. Certainly the law is trying to give both a carrot and a stick approach for small and large employers to offer insurance to their employees. And this is also a really, really exciting one. This one has been in the news a lot. Moving forward, many preventive care services must now be offered by private insurance without a copay or deductible. So again, a copay is that amount, that flat amount that you pay when you go see the doctor, and that deductible is that amount you have to meet before your insurance starts paying. Essentially what that means for you now is that preventive care services are free. Things like mammograms, blood pressure screenings, colonoscopies, contraceptive coverage, all sorts of things that you used to have to pay for. The law makes them free because the law is intended to incentivize all of us to get preventative care so that we can stay healthy rather than getting sick and needing more costly care. Already there are over 1 million Wisconsinites who are benefiting from this. So I know that this isn't as necessary for you all because you're mostly working with children and young families probably, but this is important for the people that you kind of interact with and for your communities. There is a lot of mythology going around right now about changes to Medicare, and I'm here to tell you that there are no major changes to Medicare. Medicare is Medicare is Medicare, okay? Anybody on Medicare, you can just tell them to eat a popsicle and chill out. They are going to be fine, okay? However, it's exciting that they also are going to benefit from that preventative services for free, okay? So now people on Medicare, elderly and disabled folks are going to get that preventative care and not have to pay an out-of-pocket cost as well. If you're familiar with Medicare, you might know about this thing that's called the donut hole, which is basically it's a prescription drug problem with Medicare, and it ends up costing elderly folks quite a lot of money. And it's one of the reasons that so many of our elderly population lives in poverty. So the law helps to fix that problem in Medicare, and we will all benefit from that one day. Also, the law does some work to try to make sure that Medicare stays sustainable so that those of us who aren't close to it or maybe are nearing Medicare can enjoy it when it gets there, because it's going to remain solvent. All right, now we're moving into the juicy stuff. I'm going to pause here for just a moment. Please feel free to, if you have any questions about what's already happened in the law. We're going to still talk all about healthcare.gov, and we're going to talk about BadgerCare. So don't worry about those things. I promise we'll get to it. But is there anything here? We have a question. Somebody says, this is very exciting. Is it until they are 26, as in the 26th birthday, or through the 26th year until their 27th birthday? So this person is asking about young adults who are able to stay on their parents' plan until they're 26. And I am about 92% sure that it's through the end of the month that the individual turns 26. But I'm going to check on that. I'm going to write it down and check on that and get it to Andrea, okay? But I'm pretty confident that it's through the end of the month of their birthday. Any other questions? Okay, well, we will move on. Oh. You're moving me along here, Daniel. Sorry. Mm-hmm. Okay. Sorry, I'm just writing your question down here so I make sure I'm keeping track of it. Okay. And then somebody asked similarly about the young adult coverage. Somebody says, do young adults under 26 have to be in school or college to receive this benefit? And the answer is no. Part of the point of that young adult coverage is that we, as a population, understand that young adults up to age 26 and beyond, frankly, are certainly moving through transition, whether they're coming out of high school and moving into work, or maybe into college, or maybe in and out of college and work, or into, you know, there's all sorts of, they're moving in and out of relationships, in and out of different homes. We wanted to create a consistent health insurance environment for them. So that's the intention here. So no, there are no requirements of them to be in school or college. Somebody asked, how does the ACA affect insurance provided by an employer? And I would encourage you, if you're interested in employer and small business coverage, we are having another webinar this Thursday at 1:30 p.m. and we will talk all about the implications of the ACA for small and large businesses. We also, so if you have if you're getting insurance through an employer, if you're already getting insurance through your employer, your plan is going to benefit from all of the things that you just saw. So you're going to get preventive care for free. You should have no lifetime or annual limits, etc. However, there are some grandfathered plans, but those that kind of are going to continue existing possibly for the next year, depending on your insurance and your provider and your plan, rather. But those grandfathered plans are evaporating very quickly. So in all likelihood, your plan already is benefiting from all the things I just listed. If you have specific questions about how your insurance might be impacted by your employer, please feel free to ask. There's all sorts of things in the news right now about employers dropping coverage and about increases in the cost of coverage for an employer, and we will talk about that stuff on Thursday. Couple more questions here. I love you guys. You're so into this. You're so engaged. You're amazing. Great question. Somebody says, when a new president is elected, will the ACA remain law? So I have no way to answer that with all certainty. I can tell you that I work in kind of advocacy and politics, and 100% of me thinks that this is going to remain law for the foreseeable future forever. I do also think that there will be changes and potential fixes and evolutions of the law, and that the Congress will make changes to the law, but the major structure of the law and the individual mandate that everybody have insurance and other major things that came with this law, I think, are going to remain in place. Somebody asked, can children under 26 be added to their parents' insurance if the parent is just getting insurance? Absolutely. Go for it. Somebody asked, I do not have insurance. Are my blood pressure screenings and mammograms free? No, unfortunately. So it's part of what comes with your insurance. By paying your premium every month, that in effect is paying for that free preventative care. So that's one of the perks of getting insurance. And you're paying a lot of money out of pocket for those costs, so I would certainly look into what insurance options are available to you so you can start getting those tests for free. If a child was on a parent's insurance and then got their own but lost it in a year, can they go back on their parent's insurance? Absolutely. Yes. A child can go on and off their parent's insurance. Somebody says, did you say that birth control is considered preventative care? Great question. That was another one that was all over the news and was and is very hotly debated. But the fact is, this is law, regardless of how you feel about it, but birth control is considered preventative care and is now free to women. So that means that you should, when you go in to collect your, if you're on the pill or you're on whatever it might be, that you should be getting that for free unless you're in a grandfathered plan. You really probably aren't in a grandfathered plan. Very few people are, but I always have to give that as a caveat. How much will the penalty be if someone does not get insurance? We will talk about that, I promise. If your parent is on Medicaid now, can you get on their insurance? So Medicaid, you can't get on your parents' insurance if they're on Medicaid. However, depending on what your income level is, you might separately qualify for Medicaid. If they're on Medicare, you also can't get on their insurance. So if you're 26 or under, your ability to get on your parents' plan is only if they have private coverage or if they get coverage through an employer. Okay, we're going to move on. Those are some really wonderful questions. I'm really excited to see them. Please keep them coming. All right, so here we go. We're going to get into the juicy stuff now. So moving forward, we're going to talk about the individual mandate here, and we're going to talk about the marketplace, which is the word that we use to mean the kind of healthcare.gov, health insurance exchange. Okay, so here's, to answer your question right here, the individual mandate technically began on January 1st, okay? So should I answer?
These are very specific. You want to take those on or wait till the end?
I'll wait on that one. I will ask, yeah. So somebody asked, I'm sorry, I'm going to interrupt myself here because I want to answer this one because it's a really good question. Somebody asked, what is the difference between Medicare and Medicaid? Thank you for asking that. I'm sure a lot of people are wondering that. It's commonly confused. Medicare, C-A-R-E at the end there, Medicare is what's available for our elderly population, 65 and older, and for our disabled population. So if you have a chronic and debilitating disability, then you also can get on Medicare. Okay? If you're eligible for Medicare, you probably would know that already. Medicaid is often in Wisconsin, Medicaid is often called BadgerCare. So when I say BadgerCare, I mean Medicaid, and when I say Medicaid, I mean BadgerCare. They're almost interchangeable. There's another subset of Medicaid for the elderly, blind, and disabled population, and we're not talking about that today. So Medicaid, to put it simply, Medicaid is for low-income folks. Medicare is for older and disabled folks. Okay, thank you for that question. Okay, so here we go, individual mandates. So what this means is starting January 1st of 2014, so we're 13 days in now, everyone in the U.S. who is a citizen in the U.S. is expected to have health insurance or face a penalty when they file their taxes at the end of the year. There are many, many, many caveats to what I just said. So it's true that the law requires everyone to have insurance or face a penalty. However, at the bottom here, you will see there are a lot of exemptions. So those who are very, very low income and are thus not required to file taxes are not subject to the penalty. If you have a short coverage gap, which you'll see up here, there's a 3-month gap allowed. So that means that if you don't have insurance now, it's totally fine. And actually, you cannot have insurance through March 31st. As long as you have insurance on April 1st through the rest of the year, you will not face a tax penalty when you file your taxes at the end of the year. Okay? Also, if it's deemed that there are no affordable coverage options for you, then you also are not subject to the mandate and you will not pay a penalty. If you live in this MA stands for Medicaid. If you live in a state that chose not to expand Medicaid, which we will talk about this, but Wisconsin is one of those states, and you fall below 133% of the poverty level, you also are not subject to the law. If there's a religious conscience clause, healthcare share ministry, if you're part of a federally recognized tribe, you are not subject to the law. There's a hardship component to the law if there's been a significant loss in your life, if you're incarcerated, or if you're not lawfully present. Okay, so those who are immigrants who are not lawfully present. So that is a lot of people down there. Okay, so a lot of people are not actually going to be subject to the law because for a lot of different reasons they shouldn't be. For those of us that are subject to the law, it's going to increase over the next several years. So in 2014, this year, you will face the greater of either $95 or 1% of your taxable income. What is taxable income? So for an individual, they count all the money you make over $10,000. Okay, so I'm going to give you an example here. So for instance, a single person earning $50,000 per year would have a taxable income of $40,000. So if they had no insurance for the entire year, 1% of their $40,000 would be $400. So that means in 2014, when they file their taxes, they would pay $400 for not having insurance the entire year. In 2015, when it becomes 2% of their income, they'd pay $800. And in 2016, when it becomes 2.5% of their income, they'd pay $1,000 for not having insurance the entire year. After 2016, it starts to just increase very small amounts for inflation. So that's important to understand because you're going to start to see those questions when you file your taxes next year. And what's really important here also is that it's a prorated penalty. So what that means is if you don't have insurance for a portion of the year, but then you get insurance for, let's say, the last 3 months or last 4 months of the year, your penalty is going to be less than it would have been if you had not had insurance the entire year. So you will only be fined for the amount of time that you did not have insurance that was more than the 3-month gap. Okay. Somebody asked, are legal residents considered citizens under the mandate? Yes. The answer is yes. Basically, for immigration purposes, if somebody has papers of any kind, if they have a green card, resident papers, et cetera, it's very simple under this law. It's either you're legal or you're illegal. If INS were to pick you up and deem you fit to stay in the country because you have legal papers, then you are subject to the law. If that's not the case, then you are not subject to the law. Somebody asked, if I qualify for a hardship exemption, am I out of the penalty for the year and reapply, or is this forever? If you qualify for an exemption of any kind, my understanding is that you would have to reapply for that exemption every year. And the hardship exemption in particular is only for a year because it's for kind of point-in-time hardship situations like a loss in the family or other forms of hardship. If you don't have a Social Security number but have a tax ID number, are you subject to the law? That I was just looking, I think you mean an ITIN, and I was just looking at this, and my understanding is that yes, but I just made a matrix for this. I really love charts and graphs, and so I made a visual for this. So I'm happy to send you my immigration ACA visual. So I will pass that along. Any other questions on the individual mandate? All right, here we go. Oh, and we're not going to do that over again. Oh, no, we're here. Okay, so the individual mandate is meant to begin in concert with a few other things. The reason that the individual mandate is possible is because we're changing, or the law changes several other things with how insurance works and what coverage options people have available. So, for instance, the mandate begins with at the same time that pre-existing conditions are no longer allowed to be denied by insurance companies for everybody. So that provision that I described for kids earlier in the webinar, that they no longer could be denied because they had an issue like asthma or HIV or whatever it might be, that now is extended to everybody, to you, to your mom, to your dad, to your kids, to everybody. So moving forward, when you apply to an insurance company, they cannot say no. I can't stress enough what an incredible shift that is from how insurance has worked for the last forever. And I suspect that there will be a time when our grandkids, when they become young adults and start to think about insurance, they ask us, wait, you mean that if you were sick, they could just not insure you? They could just say no? And that will baffle them the same way that rotary phones will baffle them. It will seem so archaic of an idea because moving forward, everyone has to be covered. And the only reason that is possible is because we are spreading the risk to everybody by requiring everyone to have insurance. Otherwise, insurance companies would go under. If we said you have to cover everybody, even if they're sick, but then only sick people signed up, insurance companies wouldn't last a year. So this is very, very exciting. So moving forward, insurance companies can only alter your, they can only determine your premium based on three things. One, your age, okay, how old you are. And I want to just say here that it used to be the case that older people could be charged 5 to 10 times more than a younger person. Now it is regulated to be only 3 times more. So an older person will now only pay 3 times more than a younger person. So that means that older people will pay less than they have in the past, and younger people will pay more. Okay? The second thing that they can charge you on is based on your location, because somebody who lives in Wausau or Rhinelander, the healthcare costs, like the cost at a hospital, the cost of it for a doctor, are different amounts than they are in Milwaukee or in La Crosse. Okay, so depending on where you live, they can alter your premium rate based on that. And the third thing that they can alter your premium on is whether or not you smoke. Okay, and if you are a smoker, it's not uncommon for a premium to be almost twice as much, I'm sorry to tell you. However, you can if you're a smoker and you sign up for a 1-year-long smoking cessation program, many of the plans will take away that additional premium charge for smoking. Okay, and that gives you an additional opportunity to quit smoking, and I know you've been meaning to. Okay, and then we have a question here: can your weight affect your rate? No. I'm so excited to tell you that. No, your weight cannot affect your rate. However, there are many, many plans, not all plans, but many plans have taken to offering wellness programs and incentives for participating in things like going on Weight Watchers or joining a gym, for instance, et cetera. So a lot of them have incentives in place when you get your insurance to help encourage you to lose weight. And also, as I said, there are all of those preventative costs are free for you. So if you were to go to the doctor for a checkup and need some kind of preventative health and nutritional costs, I think that should be free for you. But no, your weight cannot affect your rate, your premium rate. All right, so also the individual mandate is designed to begin with an expansion of Medicaid or BadgerCare. So that's true for the entire nation. In states, and by states I mean state legislators and our governor, had the option of expanding Medicaid or BadgerCare, and we'll talk more about this, but Wisconsin did not take the full expansion, and so our situation is kind of unique. There's also a creation of a competitive health insurance marketplace, and we're going to talk all about this, but it comes with tax credits for middle class to help them pay for insurance, and it also comes with cost-sharing assistance for lower-income families. We're going to talk more about those financial incentives. So one of the things that I think is really important to understand here is that there are essential health benefits for small and, or basically mostly for small group plans that are offered in and out of the exchange. So if you go on to healthcare.gov, for instance, and you look at the plans, you can be assured that they're going to include all of the following things that you see listed here. And I just want to point out a couple. One of the things here that I want to point out is maternity care. Moving forward, everybody, men, women, old, young, everybody is paying for maternity care. Why is that? Why would a man pay for maternity care? Well, you didn't make that baby on your own, did you? So that's the intention here, right, is that basically that we're supposed to spread the risk across the population. So moving forward, everybody's going to pay for maternity care. You also, there's mental health and substance use and behavioral health treatment. This is also the benefits that are included on Medicaid, which is for low-income folks, BadgerCare. So BadgerCare will now include all of these things as well, which is incredible. Another one I want to point out here is habilitative services. So rehab is when you are trying to gain back a skill or cognitive function that you lost. Habilitative services is when you're trying to gain a skill or function that you never had. So you can imagine how important that would be for children and youth with special health care needs. So that's a really big one. Also, pediatric services, including oral and vision care, are included as well. Big deal. All right. So one of the things that you probably heard in the news a lot is that President Obama for quite a while was saying, if you like your plan, you can keep it. Well, that didn't go quite as expected, and people were getting plan cancellation notices. And so to kind of make up for that, there's now been a kind of regulation, and these are issued every day, all the time. This is not uncommon for the administration to kind of continually interpret and define the law, and for the IRS to issue rules and regulations all the time. So one of the ones that came out says that if you liked your plan and you want to stay on it, and your insurer is willing to continue offering it, then you can continue having it for the next year. Okay. So if you got a plan cancellation notice, that applies to you, and you should call your insurer. All right, so the creation of a marketplace here. So it's there's two different ones. There's one for individuals, and there's a whole separate one that we're not going to talk about today. We're going to talk about on Thursday. That's for small businesses, and that one's called the shop. We're not going to worry about that today. We're going to talk about this one for individuals. Okay? The intention here is to achieve some efficiencies by pooling together large groups of people. So if you're on your own, you have a much better chance of getting lower cost care because the risk is being spread across a larger population. Okay? There's also financial assistance. This is how you get financial assistance. And I talked a little bit about this earlier, but this is really an exciting piece and a big shift from what used to happen. But moving forward, the intention is for there to be an apples-to-apples comparison when you're looking at insurance. So it used to be almost impossible to try to compare insurance plans. Now, moving forward, it should be understandable. It should be kind of easy to interpret as you move through there. And there are 4 precious metal tiers that all plans are categorized into, and we will talk about those in just a second here. And this is just kind of for fun. I wanted you guys to know, people always really like this. Members of Congress are required to purchase their insurance through the exchange. So you know, hopefully they have some incentive to make it work. Okay, so here are the plan tiers. So when you go into the marketplace, one thing I just want to tell you is that there's no plan called Obamacare. Okay, when you go to healthcare.gov and you log in and you look at what plans are available, you're going to see the same insurers that you see in your community now. So you're going to see, you know, Dean Care or Physicians Plus or Group Health Cooperative or WMS or whatever initials are in your area, okay? You're going to see the same insurance providers, but each of their plans are going to be grouped into one of these categories. And so the lowest level plan here is called a bronze plan, and it has a 60% actuarial value. Well, what is an actuarial value? So that means that for everybody on the plan, the insurance has to cover 60% of that population's healthcare costs. So you should expect to pay 40%. However, if you're somebody who rarely goes to the doctor and only goes in for preventative care and your quick checkup, then it might pay 90% of your costs, but 40% of somebody else's costs who's in the hospital all the time. Okay? So moving up the line here, the higher you go in actuarial value and the higher up you go through these kind of Olympic medals, the higher your premium is going to be, but the lower your out-of-pocket costs are going to be. Like up here, you're going to pay a higher premium, but that's because every time you go to the doctor and your deductible and your co-insurance are going to be much lower. Okay? So if you're somebody who goes to the doctor a lot, you want to be looking up here. If you're somebody who's really healthy and doesn't need to go to the doctor quite so much, you might want to be down here in bronze or potentially silver. I do want to point out down here, there is an option for people under 30 years old and an option for those who are not subject to the individual mandate to get what's called catastrophic coverage, which I mentioned before. But this is basically the only purpose of catastrophic coverage is to cover you from financial ruin if you were to get in a horrendous car accident or suddenly be diagnosed with cancer or something awful were to happen to you. You would have to pay your huge deductible, $2,000, $4,000, $5,000, $8,000, but then the plan would kick in after that amount. Okay, so this is for the very, very healthy, which is why it's available to those under 30, because that population is called the young invincibles. All right, one thing I want to just point out here is this silver plan. I want you to put that in your heart, notice it, and we're going to come right back to it in just 1 second. Okay, so the silver plan is very, very important. All right, there are 2 types of financial assistance in the marketplace. The first one is called the premium tax credit or subsidy. So remember that premium is that monthly amount you pay your insurance. So this is what's designed to help with that for lower income people. So this is only, you can only use your tax credit, this premium tax credit, if you get your insurance through the marketplace. Also, you have to be ineligible for government-sponsored insurance. So that means you can't be eligible for Medicaid, you can't, or BadgerCare, you can't be eligible for Medicare, can't be eligible for Veterans TRICARE or anything like that. You also cannot be eligible for what they determine to be affordable employer-sponsored insurance. So it doesn't matter whether or not you take your employer up on that insurance, it's whether or not it's offered to you. And I'm just going to put this down here. Don't feel like you need to understand that. It's not your job to understand that, but I'm putting it there for those of you who are interested. We'll talk more about this on the business webinar. But how do the government define affordable employer-sponsored insurance? Well, it's a little silly, but they define it as the premium for an employee-only plan has to cost less than 9.5% of the whole family's income. Okay, so that's what we call, in advocacy, that's what we call the family glitch. So I don't really like that definition, but that's where it stands right now. So you don't need to know that, your employer should know that, and we'll talk more about that on Thursday. Okay, this is what, as I said, reduces the monthly amount for low to middle income folks. So look at where you found yourself in the federal poverty level on that chart that we talked about. And if you are between 100 and 400% of the federal poverty level, and I think probably many of you are, especially those of you who are uninsured, then you are eligible for this premium tax credit. Okay, so that means when you go onto the marketplace, you're going to get assistance with the monthly premium amount. There are two ways to get this credit, or you can kind of do a combination of the two. And this is going to be very easy to understand as you go through healthcare.gov and sign up for coverage. You have the option of getting a monthly amount that's mailed to your insurance provider, so that the direct amount that you have to pay to that provider each month is lowered. And you can either combine these, or you can choose to just get your entire subsidy in the form of a tax credit when you file your taxes at the end of the year. Okay, so you can choose to, let's say that you log on to healthcare.gov and they say, oh, you're eligible for $500 a month in premium credits. And you can say, oh, okay, well, I want to use 300 of that every month to go toward my premium, and I want to save the rest of it for a tax credit later. The only thing that you should know here is that if you choose the monthly amount that's sent to your insurance provider and you end up making a lot more money than you thought you were going to make, it's possible you will be asked when you pay your taxes to pay back that amount that you got when you shouldn't have gotten it because you made more money than you thought. That to me sounds like a good problem. All right, so the second and last kind of financial assistance here is called cost-sharing assistance. So you remember that word, cost-sharing assistance. So that's what is the co-pay, the co-insurance, the deductibles, etc. So these have the same qualifications as the premium insurance. So you can only get it if you get your insurance through the marketplace. You can only get it if you're not eligible for BadgerCare or Medicare. You can only get it if if your employer doesn't offer you an affordable option. This is only for those who are between 100 and 250% of the federal poverty level. So this is a slightly lower threshold than the 400%. And this is where that silver plan comes into play. All right, so if you fall between 100 and 250% of the federal poverty level, you need to get on a silver plan, because that is going to help lower your copay, your coinsurance, and deductible. But it has to be a silver plan. It cannot be a bronze plan, cannot be a gold plan, cannot be a platinum plan. Silver plan. That's our mantra here, silver plan. Okay. This is just a quick example. This is a kind of a calculator that just gives examples of, you can put in how old you are, your family size, whether or not you smoke, and how much you make. And it will tell you what it expects you to have. So for instance, somebody with a 40-year-old with a family of 4 making $60,000 a year would have a premium of about $12,000 for the entire year, but they would also get a tax credit of about $7,000, which means the family would be left with about $5,000 to pay over the course of the year, or $411 a month. $411 for a family of 4, not bad. Okay, also maximum out-of-pocket costs here. So that's the cost-sharing assistance, like the deductible, copay, and coinsurance. Moving forward, if you're an individual, this is your maximum out-of-pocket cost, and if you're a family, it's about double that. So that didn't used to occur. I know those numbers still look very big, but I promise you they're way, way, way better than not having them at all. All right, I'm going to pause there for a moment. Quick questions about the marketplace, the plans, anything like that. Somebody asked, if I qualify for catastrophic insurance through a hardship, does this mean after a year I may lose this insurance again? So no. So if you qualify for a hardship exemption to the law, to the individual mandate, then you can get catastrophic coverage, but then you would just have to reapply for your hardship exemption, but you can continue your catastrophic coverage if you were to once again receive an exemption the following year. Okay, but you are going to have to kind of address that every year. Okay. Somebody asked, how is income determined? Oh my goodness, that's such a wonderful question. And I took out a bunch of slides that gets all into that because it's really kind of mucky. Moving forward, we're going to be using an income determination method called MAGI, which is Modified Adjusted Gross Income. For those of you who I'm like losing mentally, just give me 3 seconds and I'll come back. But it's called Modified Adjusted Gross Income. So basically it starts with your gross income, or your adjusted gross income, excuse me, and then basically you're taking out things like child support and Social Security income and stuff like that. But there's kind of a complicated algorithm that they use to determine your final income. I'm sorry I can't answer that in a better way at this time. Does it matter how much you have in savings, or is premium only based on income? Great question, Diane. Sorry, I don't know if these are supposed to be anonymous, but I loved your question. Does it matter how much you have in savings, or is premium? Okay, so for the purposes of the marketplace, so for healthcare.gov, which is the marketplace, same thing, okay? How much money you have, your income or your savings, has nothing to do with it. So it's just like if you were to go to the private market now and you were to just go to Dean's website and see how much you would have to pay as an individual, they're not going to ask you how much money they make. They're just going to say, we want $400 a month, and you're going to say yes or no, right? So for the marketplace, it doesn't matter at all, okay? If you're talking about the premium tax credit, so whether or not you're going to qualify for the financial assistance, that is only based on your income, and your savings or assets like your home and your car, those do not count at all, okay? Not at all. For BadgerCare, it's the same. So it's only your income that counts. If you have a bunch of money in savings or 3 houses or whatever, that doesn't count, okay? So it's just about your income. How would you know what the best assistance plan for you is? I would suggest getting some help with enrollment assistance, and we'll talk about how to find that help. If I had a high income last year, but now I'm in a different financial situation, is there a place to document that in the marketplace? Really good question. So when you go through your application in healthcare.gov, it'll ask you how much you expect to make this year. And that's where you can put that in. If, let's say, you put in, I'm going to make $35,000 this year, but then something changes and you end up knowing you're going to make a lot more or a lot less or anything, you can go in and just click a button and make that change, and it will alter the determination accordingly. All right, those are really good questions. We're going to move on for now to make sure we can get through BadgerCare. I don't have too many slides left here, so we're cruising right along. All right, so here we go. So I want to just emphasize that everything we just talked about, those are all federal decisions that are included in the Affordable Care Act. What I'm talking about with BadgerCare here, these are state decisions. These were made by our state elected officials, so our governor and our legislature here in the state. Okay, so there's just a difference, just so you know kind of who's making what decisions and how this is all working. I think it's helpful to know. All right, so right now, don't get too confused with all of this. Okay, so right now, this is what BadgerCare looks like. All right, so basically, children are eligible up to 300% of the poverty level. Pregnant women are eligible for BadgerCare up to 300% of the poverty level. Parents and caretakers are eligible up to 200% of the poverty level. I apologize that I can't draw it all. And there was a time when we had an option for very low-income childless adults to sign up for coverage. That's why you see this circle here. but that was then shut down, okay? So right now we only have, it's actually closer to 15,000 now, but so they're not accepting any more childless adults into that, and right now there are over 163,000 childless adults that are on the waiting list to get into that program. So that's the incredible need that we have there. So just take a look at this quickly. So children 300, pregnant women 300, custodial parents 200, and effectively childless adults are down here at 0. There's no BadgerCare coverage for childless adults right now, okay, because they can't get into this program. Here's where we're going. Children continue to be eligible up to 300. Pregnant women continue to be eligible up to 300. However, moving forward, parents and caretakers, they used to be up here at 200, if you remember that. They're moving down, okay? So this is about 77,000 people. So this was the governor's decision. Our prior program had coverage for parents up to 200% of the poverty level, but because individuals can start getting premium subsidies at 100% of the poverty level, the governor chose instead to give childless adults coverage up to 100%, and to pay for that, he reduced parent coverage down to 100%. So these guys over here, the parents and caretakers, are losing coverage, all right? They're going from 200 down to 100, and these childless adults are going from 0 to 100, okay? So moving forward, if you're an adult who's not pregnant and you're below 100% of the federal poverty level, it doesn't matter if you have kids or not, that's how you know if you're eligible for BadgerCare, okay? Everybody else isn't. If you are one of the people who falls into this 77,000 people and you're getting letters in the mail saying that you are losing your BadgerCare coverage, you should get a form in the mail that asks you to identify some income information, like whether or not you get child support. I highly, highly recommend you fill that out because, as I just kind of explained, the way that they're determining income is changing. So it's possible that the information they have for you right now just shows that you're not eligible for BadgerCare, but if you give them more information, like about your Social Security income or child support income, et cetera, it's possible that you could still qualify. So please pay attention to the letters that you're getting in the mail, and let me know if you have questions about that. So just to reiterate, we're losing 77,000 parents on BadgerCare, and we're gaining about 80,000 childless adults. Everybody above 100 is expected to go into the marketplace and benefit from subsidies. This is big news. You've probably maybe seen this in the news. This shift here was supposed to start on January 1st, but has been moved to start April 1st. So if you're a childless adult below 100% of the poverty level, you are going to have access to coverage started April 1st. Somebody asked, can BadgerCare coverage be backdated? It depends on which population you fall into. So it depends on whether or not you're a pregnant woman or you're a custodial parent or childless adult. Often it can be backdated to the point of application. For those who are newly eligible, you're not getting coverage until April 1st, even if you were to apply on February 1st. Okay? All right, so we're going to move on here. Please keep asking questions about that. I'll pause for just a second for BadgerCare, because then we're going to pull it all together. We're going to wrap it up with a bow. We'll see how we do. Are there more?
These are all on BadgerCare.
Okay.
Do you want to take them now, or you want to wait?
I think let's just take them. Okay. So somebody says, just to be correct, when you say with child includes parent-supported children up to age 26. Thank you for clarifying that. So when I say parents and caretakers, I mean parents and caretakers with children under 18. Can a pregnant woman with employer insurance also qualify for BadgerCare? Can a pregnant woman with employer insurance? So I will get you, I made another chart for this. So what you're talking about is what we call crowd out rules, which means that there are restrictions on whether or not individuals are eligible for BadgerCare and other government programs because they're trying not to, quote unquote, crowd out the employer industry. So if you have an offer of affordable employer insurance, generally you do not qualify for BadgerCare. It often is different for pregnant women. So I will send to Andrea as well my chart that depicts this in one page with pretty colors so that it's easy to understand. A really good question here, are the federal poverty levels going to change year to year? Really good question, and the answer is yes. So new poverty levels come out every year, generally kind of in the beginning of February. The federal government releases new poverty levels. They increase every year for inflation, so they increase just kind of a tiny amount. But for the marketplace, the 2013 federal poverty levels are going to be in place throughout the entire enrollment, open enrollment period, which goes through March 31st. Okay, so we're going to move on here. Let's see if I can find my thing. Okay, so we're going to pull it all together. Here we go. So this is a slide that I made just to kind of in one visual way depict the options of insurance in Wisconsin. So this is not true for all states. This is just Wisconsin. And this is purely for those that do not have access to an affordable plan offered by their employer. Okay? So you'll see here that pregnant women, children, parents, caretakers, and childless adults are all eligible for BadgerCare up to 100% of the federal poverty level. And then pregnant women and children continue to be eligible for BadgerCare up to 300%. You'll see this here. There's a sliding scale premium for kids starting at 200%, but it's very, very minimal. All right, so generally, kids and pregnant women are eligible up to 300%. For parents and caretakers and childless adults, their coverage stops at 100%, as we just talked about, and after that time, they're eligible for both the premium tax credit that we talked about to help their monthly costs and the cost-sharing subsidy that we talked about. So if you're between 100% and 250% of the federal poverty level, you get both of those forms of financial assistance. Starting at 250%, you get the tax credit up to 400% of the federal poverty level. And after that, you can still go to the marketplace and sign up for coverage. You just wouldn't benefit from the financial assistance. So there can be millionaires going in there and getting coverage. They're just not going to benefit from these assistance measures for low and middle income families. Over here, elderly, blind, and disabled, this is a different form of Medicaid. You generally, if you don't know about it already, you probably don't need to, but just so you know, there are no changes here. They're not even changing how they determine income for this classification, so no changes. The last thing I want to point out here is FPOS or FPOS or Family Planning Only Services. So this is a single service type of coverage only. So if you get into the Family Planning Only service, this will not count as minimum essential coverage, and so you still will be subject to the mandate. So you can't just be on FPOS and not get other coverage. This doesn't cover enough. So Family Planning Only is purely meant to cover contraceptive coverage, pap smears, cervical cancer screenings, other sorts of reproductive health measures. But this is still an important thing, especially for if you're transitioning in and out of jobs or transitioning in and out of different types of health care. This can be really valuable because you want consistent access to reproductive health care, particularly women. All right, so we're wrapping it up here. So some dates to know. Maybe you know this, maybe you don't, but starting on October 1st is when healthcare.gov opened and when open enrollment began. You might have heard that the website was not working quite as well as we might have hoped. And so now the website is working very, very, very well. I'm on it often, and I can tell you that it's working quite well, so rest at ease. So in January, January 1st is when coverage started for the marketplace for anybody who signed up for coverage between October and the end of December. All right, so some people are already getting coverage and going to see the doctor using insurance that they purchased on healthcare.gov. There are millions and millions of people who have already purchased insurance on healthcare.gov and are now benefiting from that. So for those of you who are getting forms in the mail from BadgerCare, this is the one that I was talking about on January 17th, coming up very, very soon. Department of Health Services is asking that you return this form that's called the BadgerCare Tax Filer Information Amendment Form, because they got to make it sound complicated. But truly, it's just meant to ask you some questions about your household size and to ask you some questions about what types of income you have, particularly if you get child support income. Please, please, please fill that out. On February 3rd, this is a really important date, on February 3rd, childless adults below 100% of the federal poverty level can start applying for coverage through Access. Access.wisconsin.gov is our state-based application website. So there's healthcare.gov, which is the federal one, and there's access.wisconsin.gov, which is our state one, okay? Beginning February 3rd, our state website is finally ready to start accepting applications for the population that's going to be newly eligible, but your coverage wouldn't start until April 1st. But it's really, really good to apply early and so that you're ready and able to have coverage starting April 1st. March 15th, this is an important date for parents and caretakers that are losing BadgerCare coverage. So those 77,000 parents and caretakers that are being moved off of BadgerCare and into the marketplace, March 15th is your last day to apply on the marketplace for coverage to begin April 1st. So if you do not want a gap in your coverage, you're going to lose coverage April 1st. So you've got to apply for coverage by March 15th in order to have coverage on April 1st through the marketplace. All right, another important one, open enrollment for the marketplace. So if you want coverage on the marketplace, you've got to sign up before March 31st. After March 31st, the only way to access coverage on the marketplace is if you have a qualifying event, which is the same thing that qualifying events are now, which it means if you were to have a baby or lose a job or lose your insurance or something like a huge life event were to happen, then they will give you a special enrollment period of 60 days. But most people will not be able to access coverage through the marketplace after March 31st. And finally, April 1st is when the new BadgerCare income limits take effect. So as we said here, childless adults that are newly eligible up to 100% FPL will get coverage and have access to doctors and providers starting April 1st. All right, so what now? Okay, so number one, keep calm. Okay, everything's going to be fine. Everything's going to shake out just fine. You know, it's a big law. There's a lot of changes, and I think that we all just need to kind of support each other and primarily understand that you're going to get support through this transition. And I think today's webinar and Wika hosting it is an excellent example of that. So just take advantage of your resources. One of those resources is healthcare.gov. So I would really encourage you to go to healthcare.gov just to see your options. There is no, when you go there, even when you fill out all your information, there is absolutely nothing forcing you to choose coverage, okay? You can go through the entire process and then still not choose to purchase a plan through the marketplace. So it's just like buying a sweater, right? Like you can click it, you can add it to your cart, you can stare at it for a while, you can look at the color, you can change colors, but you really have to push purchase at the very end, and then you still have to pay your premium, okay? So there's nothing forcing you into any contract or anything like that. So have no fear and go to healthcare.gov. And please, please, I encourage you to share the word with your friends, your family, and your clients. Everyone can benefit from having health insurance, particularly the people you love and care about. All right, so, and what are you going to tell them, right? So I think a couple very simple things that I'll just tell you now. And the first thing is that we're hoping, our intention here is that there's a no wrong door approach. Okay, so you can go regardless of your income. I know I just gave you a lot of information about income, and it seems like it really matters, and it does, but you're not supposed to know all the rules. Just having gone through this webinar, you truly know more than 98% of the entire nation, okay? You're not required to know any or all of what I just told you. It's helpful information, and it's really good reference, and now you're in the know, but truly, all you need to know is that you can go to healthcare.gov. Even if you're eligible for BadgerCare, you can still go to healthcare.gov, and if they determine that your income is low enough that you qualify for BadgerCare, they will move your case over to the state so that you can get BadgerCare coverage. And the same thing for access.wisconsin.gov. If you go to the state and you put in an application and you're determined to have too high of an income, they will transfer your application over to the feds to healthcare.gov so you can complete it there. All right, so we're still working out the kinks in that system, but largely it's working already. And I really encourage you to choose a path and start looking at your options. A resource on here is your local income maintenance agency. So if you have questions about BadgerCare coverage, you can go to your call or go to your local income maintenance agency. And you can look up what your agency is. So they're local, of course, and so you can look it up. You can look up their phone number, you can look up where they're located, and you can find that information on the DHS website, okay? And lastly, for those of you who qualify for food share, food stamps, family planning only services, child care, support services, you still have to apply for those things through access.wisconsin.gov. All right, and I'm on like the second to last screen here, but I just love to emphasize this because these, I think, are the 4 main points that really resonate with people. So the first one is just simply all insurance plans are now going to have to cover the things that you need them to cover. So in the past, a lot of people have had bad experience with insurance, and it's not helped them when they really needed it. That's not allowed moving forward, okay? So you can tell your friends and family that. It's going to cover your hospital when you need it to, okay? Although be careful about in-network and out-of-network stuff. That's just always going to be an insurance problem, okay? The second thing is you might be able to get financial help to pay for your health insurance, not just your plan, but also your cost sharing, like your copay and coinsurance and deductible. The intention of this law is to make coverage affordable. And so when it says you might be able to, about half of all people who go to healthcare.gov are going to get a subsidy. All the stats show that that's the case. So it's possible that you're on the right side of that number, okay? And third here, if you have a pre-existing condition, we talked about this a few times, if you have a pre-existing condition, insurance plans cannot deny you coverage. They can no longer say no. It used to be a pre-existing condition to have been in a domestic abuse situation. It used to be a pre-existing condition to have had a a C-section or a variety of other things. No more is that the case. All right, so that's a really big deal, and I think a lot of people get a lot of peace knowing that. Lastly, all insurance plans will have to explain their plan and the cost and what's covered and what networks, what hospitals, what doctors are covered in simple, understandable language. It's not going to be written in Russian anymore, okay? So take those, put them in your hat, put them in your heart, and just, if you can just tell people even just one of those things, I really think it can go a long way. And these are just 2 different kinds of enrollment support here that are new for people. So there's something called a certified application counselor, and there's also navigators. These are people who can help you walk through the application process, all right? All right, so in-person assistance, this is a really good website for you to write down, www.e4healthwi.org. This is a Wisconsin-based resource. It's put together by a partnership of nonprofits and DHS and others to be a portal of training requests and Wisconsin enrollment directory. So if you're trying to find out who is doing enrollment assistance in your area, if if there are, community health centers or libraries or job centers or others that are offering assistance, that should be included here in the Wisconsin Enrollment Directory. You can also go to healthcare.gov, and they have a list of those CACs, the Certified Application Consultants, and the navigators. So if you want to look up a CAC in your area, you can do that there. And here we are. We've arrived at the end, and as we said, I'm happy to stay and answer all questions. It seems like we have a few here to answer. I just want to say, please feel free to write my email address down. I'll tell you now, I'm better at email than I am at the phone because I'm in and out of the office all the time. I am leaving my position in a few weeks. I'm sorry to tell you that, but there are wonderful, wonderful people at WCCF that will continue to be able to help you and can serve as a resource for you. And I know Wika here is going to help do a wonderful job of getting you connected to the resources that you need. But for the next few weeks, for sure, please feel free to email me if you have continuing questions or concerns. And moving forward, feel free to go to WCCF.org and call or email someone there, and hopefully we can get you connected to what you need. All right, thank you so much for all of you. I will continue to answer some questions here. Feel free to hang and listen to people's really great questions. Or we will see you hopefully on Thursday for our webinar that starts at 1:30. That's more targeted for small and large businesses, people who have interest in that.